Welcome back. We are tracking all parts of the market amidst this tariff confusion this morning. The currency market actually tells the story quite well. We saw relatively stable performance in our Canadian dollar overnight. So far, we've spent the first 15 minutes of the program talking about the messaging coming out of Donald Trump's administration through the Commerce Secretary, Howard Lutnick, who is hinting that there could be some kind of development today. Common ground in the middle is his word. We don't really know what that means, but it does mean, at least in the short term, that the Loonie is holding up against the greenback, but maybe the currency market is just confused. Let's bring in Shaun Osborne. He's Managing Director and Chief FX Strategist at Scotiabank. Nice to see you. What would you say? What are traders thinking?
I'd agree with you. I think it's quite confusing. The messaging late yesterday was that there might be some sort of concession from Trump today. So we got a bit of a pop in the Canadian dollar late yesterday afternoon. We've held those ranges overnight and this morning, and I think the additional comments we got from the Commerce Secretary just a few moments ago kind of adds to the confusion. It's not really clear what kind of concessions he's talking about, or if we're going to get any concessions at all. Okay,
well, let's pull back from that for just a second, and then just try to give people a range, because we had a conversation earlier, and the guest sort of gave a level on the S&P 500, which would represent a correction that he feels would maybe get the attention of President Trump. Now, for people who are trying to figure out what happens with the Loonie, and a reminder, it's already been under pressure for months here, right? I think we were at, call it 74 cents in the fall, and here we are below 70 cents. I've heard all sorts of stuff in terms of the downside for the Loonie, anywhere between 65 or 67 cents. What's the math you're working with, just depending on the scenario?
So we think in the short run here, until we get a bit more clarification on exactly what kind of concessions we may get, we're probably going to hold around this 69 cent range. So it'd probably be 50 ticks either side of that in the short run. More broadly, if we get no tariff concessions and we're still looking at 25% tariffs for a significant period of time, that probably means further weakening in the Canadian dollar, at least back to the lows that we saw in early February, probably around that 67 cent point or a little bit below.
Okay, and then the other thing that was bubbling up yesterday, we will only know with time which economy is in, call it, worse shape as a result of tariffs. But initially, because some people weren't sure if we were going to see Trump go over that line in the sand, all of a sudden people said, oh, now the Fed's going to have to cut rates quite aggressively this year. And so you initially actually saw some weakness in the U.S. dollar. Does the central bank part of this story factor into what happens with the currencies over the next few months?
So I think lower yields in the U.S. has certainly changed the perspective on the U.S. dollar quite considerably. On the one hand, we've got the outlook for lower U.S. yields in response to some signs of some softening in the U.S. economic story. This week, some of the high-frequency data we get, surveys, have suggested that there is some softening in the economy. The ADP number this morning was quite a bit weaker than expected. We got non-farm payrolls on Friday as well. So lower U.S. yields are an important part of the U.S. dollar story here.
And I try to steer clear of conspiracy theory, but there are people that are making the argument that the Trump administration likes the idea of lower yields right now just because they're looking at all the math of running the government, and if they can refinance some of the U.S. debt at lower yields, maybe that's where this rhetoric benefits them in a way that nobody's thinking about right now. Do you buy into that at all?
No, I think that's a key part of what they're trying to achieve with some of their policies in the long run. They want the focus more on longer-term yields rather than the Fed policy rate, so they steered the market's attention away from Trump's comments previously on the Fed and what the Fed should be doing with interest rates to the longer end of the curve. And they hope with reducing government spending that sets the environment for lower U.S. yields, which are good for mortgages, good for longer-term consumer rates as well.
I'm going to try to, this is very helpful. I'm going to try to get through two more questions that I think are important. Number one, as we're now sitting here, like I was sitting here when we were seeing all the back and forth in the North American Free Trade Deal, or USMCA, when Trump was first elected. I mean, this was a long process. The market had to consider there was going to be trade tensions bubbling over a period of time. I wonder if maybe we should be thinking about the market responding in a similar fashion. Obviously, tariffs themselves are very, very painful, and everybody's fearful for a recession in Canada. But if there is this back and forth and give and take, is it just a sort of a different version of what we already went through, like a negotiation in the past?
I think to some extent. I mean, I definitely think a renegotiation of USMCA is very much on the table. That's up for 2026 anyway. There'll probably be an advance on that, I'd imagine, as a consequence of all these talks on tariffs. But the unhelpful thing for markets is that we have a lot of uncertainty in the meantime.
Yeah.
A clear conclusion to USMCA gives market certainty, gives our exporters here in Canada a lot more certainty. We're a long way from that, though, at the moment, I think.
Yeah. Okay, the last question I just want to get in for now is, there's been a strong argument that economies around the world in some cases want to shift away from the U.S. dollar. Obviously, the suggestion is that China has been doing that. Russia actually called out a bunch of nations and said, let's do it. Now that we have seen the world sort of observing Trump's tariff plan, what do you think that means in terms of just the appetite for the U.S. dollar in light of the current environment, whether countries can do something or not?
I definitely think we've seen a move away from the US dollar to some extent from those large asset managers, central bank reserve holders, who have clearly been moving away from the US dollar over the last few years. They've been buying a lot more gold, for example, to replace those dollar reserves. So the US is running some risks in trying to challenge its global partners in some respects, because China is a significant holder of US Treasury debt still. Other central banks around the world obviously holding significant amounts of US dollar denominated assets as well. So the risk of a significant move away from that probably pretty low at this point, but the kind of passive move away from, so an active move away from the dollar in that sense is probably unlikely, but a passive move away, that's to say, as reserves are acquired, less goes into US dollars. I think that's certainly a risk for the US dollar. So at the margin, yes, there's a diminishing demand for US dollars from those large asset managers.
Okay.